gonna go fast push like to 60. I'm gonna short fuck on. I fucked on. Cool box. This W, this what the fuck is if it has a fast push into its pre-market high, I think it's a short too. And max, I'm not touching because of the locates, but I'm just gonna have it to watch tape or something. Oh, you sick, bro? You're sick. That, right? Helps so much. Bro, it helps so much. Yeah. It's like it detoxes all those germs and shit. Steam room? Are they the same shit? Oh. Wait, what was that? What was that low flow? What was that low flow you're talking about? QSG. How'd you find this one? Yeah, someone else mentioned this one too. Yeah, it's a low flow. 11 million float, you said? This was interesting. I'm still gonna watch MLGO too. CRWV is going higher. Yeah, I mean that cow's pretty bad. I sure to see the CRWV as well. RWV Bagatas. Uses JYD's limit down. Neo cooldown. So liquidator. Sheesh. Holy fuck, this one liquidated in pre-mark is hella hard. Indicating 18. So funny. No, $18. It's indicating $18. That's kind of fucking hilarious. Oh, and I'm looking at WTF. It's indicating 56 cents on JYD, my bad. I was about to say. I mean, the only reason why it's up now is that would make sense.
I feel like this Tesla trade is very tricky because you do have maybe an opening range break to the upside, but at the same time, since that news came out at 9, you're kind of just having resistance at the 9 EMA for the 2 minute, for instance.
Yeah, it's tricky, and then it's like you're also coming into the setup is like you're just gapping down into support.
Right.
I'll be careful shorting Tesla here. The Q's bouncing from that 466. I'd rather wait for that 260. 260, 261. I'm also looking at QSG for day 2, continuation higher.
Oh shit, nice. GG's is liquidating now.
Tesla will be a down through open there, but with the
I
catalyst.
was gonna say that 932 candle that was looking at it as a down through open, but then it quickly rejected from there. Went straight back down to 250 and then or 252 and then now up from there. So I'll be looking more of an opening range break.
Are you shorted?
I'd rather wait for the Q's come at me at 473, 473.50, and then look to see what it's gonna do from there. Maybe a backside like it did yesterday in the day.
Tesla back to zero. Open. GYD.
EWTX just came up too for possible short, but it's gotten down into daily support, so I don't know how I feel about this. To 1450s.
I don't know. I think I wish it would get down to like 30 cents or something.
Oh, actually, it's breaking down out of this range.
Yeah. ICT. Is it worth the rolls now that it's coming back?
Tesla looks like it's trying to put in a higher low.
Yes, Q straight up for the first 5 minutes. This can give an extra leg higher to Tesla.
ICT consolidates, I would short that.
Yeah, I think if this consolidates at the high of day, might have a trade here for opening range break or a second chance. So we're coming into, I think this is yesterday's low day. Yeah. I feel like the the 5 and the 2 minute charts on Tesla do not look very good.
Index is breaking out too.
There's the continuation above 258.
Testifies.
And so we're getting the opening range break through yesterday's low day, getting volume coming in. I'm waiting for a pullback back into like 258. For a second chance. So I think if you were trying to take this opening range break, I feel like your low with your stop would probably be like
CRVL.
below VWAP. So the risk reward is not that good. So looking for a retest for more people to get involved.
Yeah, I like the second chances better when it's trading above high day and pre-market high, like it did yesterday. Yesterday's second chance at 11.11, that was the best one. Not really liking it today.
Yeah, for sure. But that's why I'm saying Tesla's tricky today since
Yeah.
it's such a wide range.
Yeah, because right here you're technically coming up into pre-market support, now turned resistance.
Mm.
And we just consolidate on these
And also pushing up into previous day's low 260 level,
CRW.
so that's more supply there.
I'm just watching a second chance here.
ICC team pop.
Alright, check out IONQ, trading above yesterday's highs. Lyft also trying.
Yeah, that one's definitely bad side. Pausing to do upturn. Like that. What the fuck is a bitch? How much are lookies for you? Oh, what the fuck? I was talking to Yanni tonight. I know for us that's $40. Nuts.
I did not take Tesla.
I'm gonna cover us 280 well.
I'm trying the second chance in Tesla here. 258, 50 stop.
Really good call, Ben, on that VL, bro. That was great.
CoreWeave is coming back up to high of day.
I didn't get fill. Fuck.
WTF was such a nice VLO too. It's just like the local is expensive. It's way too expensive. I covered here some in studio, but I got my full size into like 5.6.
CoreWeave high of day, Bree.
Alright, moving
Getting
away
volume.
from Tesla. Getting FOMO. Just gonna watch that later.
Yeah, I don't like it.
CRWV thrives. ICCTs might be a pop to short.
I'm watching CoreWeave here for a second chance. Oof. Not touching CoreWeave.
Gonna be keeping an eye on IO and Q for after 10 a.m. I want to see a pullback back to 24 in VWAP for a second leg.
How do you feel about Inmax fashionably late?
And Max.
Is anyone trading PLTR?
Nah, that's a big boy stock for me, bro. And Max. I'm gonna let it do its thing first. PLTR, no.
Oh man.
Oh, wow, okay. PLTR. Maybe a pullback in PLTR. An eye on that.
I got the hitchhiker, but I'm seeing if I close this.
I'm also gonna also keeping an eye out for Rocket Lab RKT. I want to see a
Yeah, I hit my
pullback.
scanners earlier.
Record.
And that's back to relop.
Inmax getting volume.
What the fuck is making 12? CRWV stuck that high. JYD is also coming down. Again. December's
Starting to think Tesla might be a decent short here.
nice KSG back to low. $540, got my bid out. More size. Get flat on 2-minute turn after that.
I'm gonna take short here on Tesla. A 5-minute power bar break.
IMG versus QUSG. Nice. GG. Can't forget about that one.
CRWV, opening range break maybe.
What do you mean by rates? Like how much you short overnight? I'm not interested in casino runs, but yeah, I guess like basically it's because of them. Cover more the low Bollinger because QSG. I got like a third of my size left for like 2 heads or for like $4 if you really M1s.
And Tesla's pretty interesting here.
Yeah, 100% bouncy ball. Yeah, right into his lowest Bollinger.
I'm trying summon Tesla here. Long.
Long?
Yes, sir.
It's coming into its news price. Resistance.
Oh, MIQQ. Is that how it? No,
Right now, I feel like it's doing like a failed fall through new high.
it down.
Still has trend support.
Fuck yeah. That was such like I know that was mentioned, but I didn't look at it until Ben talked about the VR roll. That was looks nice. Shit. I kept adding. Like I feel like once it consolidated below Y low and it went red, I think that was a good add. Yeah, yeah. Or like yesterday's close I'm talking about. Because usually that pattern has a small cash back to like the first red day and then goes to Y close. This goes red. I like the pattern. You got
I'm doing a 2-bar break in Tesla. Just something quick. I like the Qs right here bouncing from the 5. Hopefully we get that break. High day in the Qs over 472. Maybe test 474. That's the type of move I'm looking for the Qs and Tesla. And Tesla maybe just breaking over 265 and test 267. Sell everything there.
I might have VCT. But what do you think on
side day through pre-market lows or highs.
I like this consolidation. I like this consolidation CRWD.
Nvidia looking for a second chance. Nope, not like that.
Looking at the PLTR and Tesla. PLTR 87, Tesla 265. To see if we can break the consolidation on PLTR. Nice.
Anyone have a good understanding of the Tesla numbers today?
They were not the best. Everybody's thinking short, but the market is bouncing. People probably got caught short off guard. Have to cover, especially after that high day break.
Oh yeah, because it's being.
So I guess my question is, were the numbers that bad? Is this like a buy the news sort of thing after it's been sold off so much?
Selling some of Tesla here. 265s.
That was a good short. I like that. What's the turn? Seconds on QSG. God damn, how many shares?
Volume on the queues on that 4 minute.
I have like $8 per share.
We are at the close price. So let's see.
Yeah, this big pig. Could have shorted more cheaper. Open.
CRWD is getting volume again.
Q's green on the day. Want to see how it acts around 473. So we just blow through.
Plus 5, I'm gonna get flat. Tight.
If Tesla comes back to 263s, breaks below 263s, I'm out of the rest of my long position.
Bottom.
Alright, I think I'm gonna call it a morning. I don't really see anything I like today.
I'm trying some CRWV for an open range break.
Got flat my ESG per trade, bro. Close to full stop on there. Routine players, bro.
These close and open price has been like good pullback points on the market lately.
Not really covering any.
I'm looking at IO and Q here for a VWAP continuation. Risk and break of 24.
That was such a good idea, Yanni. We should. Makes sense. Fucking the deal and this daily chart. Yeah, you want to short this part. Yeah.
It's like a backside there.
Or FX.
It's,
Push back. WTF open. 9. That was such a good one. The love was more expensive. I would have taken it. Holy shit.
yeah.
This 470 should hold in the Qs. If we want to continue higher for Tesla, if Qs break below that 470, I'll be all out.
Target should be VWAP. Qs. Let's see.
I'm all out of that Tesla long. And looking at CRWV for a second chance here.
backside. You don't know that? I don't know that. Where's Brady, man? Talk to him. Yo, he used to have another kid. Actually, no fucking way. Really? Where's Birdie? Are you dead ass, bro? Nah. They talk on the side. Yeah, wrong. Yeah, yeah. What do you, ICCT might be a bit the most. Hey, yo, bro. I have a question. How much are the locates for you for WTF?
I don't know how to check. I don't know how to check that, bro.
You know what I check?
Nah, it's halted now.
What happened?
It's halted now. WTF?
So you don't like you never located before?
No, I never done.
Really?
No. Yeah, that's not part of my playbook. Everything that I short it, if I do short anything, it's easy to borrow.
Okay, okay. Makes sense. See, oh, ICCT is the most.
Ask Randy, he knows.
Oh yeah, I should try something. Nah.
Looking at this IONQ here. Risking the break of 24.
Leave them alive. ICCT lows. Kinda wanna add. Everything young. Thought your price is pretty good, but then you said retarded. That's fine.
Selling half of my CRWV into 63.
Dude, I think this can fucking squeeze. Go short some. Dude. Yeah, same.
Sold 80% of my
Enrique,
position
at what
there.
price do you
What's up?
have VWAP on POTR?
There's no bar on.
Give me a sec. Give me a sec. PLTR VWAP. I have it as 8556. It's coming into it right now.
Mm. Okay, man. Thank you.
And I'm also trying some more Tesla long here after that bounce from Qs. And I'm giving it a 2-bar break for Tesla. IO and Qs coming into high day, looking to sell some here.
Dude, you know what the best part about the QSG? Those Lokis are like 40 cents. Like, no one watching them. ICCT, breaking down. Damn it. Bad. What is news on? Is it going up? No, it's not. You do anything with that DGT? $3 now. The news from the morning.
Come on, just break high day. Another push. IO and Qs.
Nice, nice ICCT. Dude, how many shares do you have on ICCT? How much did you short at? Nice. Fucking nice. That was a sick one. At least I got some. It's like not that.
Alright, fuck. I'm all out of IO and Q. Sold everything into high.
Cake. I'm not buying more Lokis.
Alright, it's not bad. But fuck, I missed out on that move.
You think $8 per share was worth it? It's worth it.
Suddenly sold everything there.
Now $8 per 400 shares. What do you think? I could have wasted $16 in there. Bought 200 shares. I'm about only short for OP. I only got 100. Dude. Okay. I was just gonna get like an extra 200, so like 300. I would pay $24. I'm just kidding.
Fucking I got IO and Q. Piss doodle.
Yeah, that was sick. I mean, I didn't even. Yeah, it was so sick. That was a sick couple from that.
Alright, Q's coming up again. 472.50s.
Yeah. Yeah. The bag down. The bag. I mean, the gap down just for the bags down.
Oh, it's like a bouncy boulder. Want to see if it can break.
Yeah, that looks like a buy to me.
So we finally got a potential higher, or sorry, lower high put in for Tesla. So we'll be looking if we get a break here below 261 and 260. Honestly, I could have set up for a what's it called? We'll see ultimately if it sets up for a fashionably late or if it does a VWAP bounce.
You fly Sarah WV? What are you doing with your stuff? Yeah. Yeah. Nothing to me.
CRWV, I'm out of the rest there. In that break of 60.
I gotta fly my ICC here. No. What was that?
Looking at IONQ for a second chance higher. He was trying to go green again.
So funny.
model valuing Qs. Oh, second chance there. Looking at QSG backside. Didn't get filled in QSG backside there. Still have my orders floating just in case we get a flush. Quick 10 cents. And ideally I don't want to see a break or trade below 535. ISG. I'm canceling my orders. Let's say the trade is gone without me.
Trying my pullbacks. It's funny to go.
I was gonna say if Tesla gets above 264 or 265, would be looking at that just VWAP continuation here.
Me and you would have gotten fired.
CRWV fashionably late.
Imagine if you type me and you. Oh my god.
Oh, I did go selling into that 64.
I know, right? Yeah, for real. So I'm gonna expose the industry. Dude, I had a heart attack when I saw them. Oh my god, I had a heart attack. I had to get flat my fucking on my trade. Dude, that fucking phone. Yeah, fucking phone. I was like, yo, take that shit down. Yeah. You know what I did? I went back to his fucking Discord channel where he started going, oh, here's my number. And I was like, hold on, here it is. I just fucking called him. Like, are you kidding me? It's not good, bro. Disappear. Imagine.
$264 in Tesla.
That's what you depreciate.
Ay, ay, ay.
Yo, Ben. First. I bet you have your phone on light mode. Okay, never mind. Yeah. That's because I keep hearing your like message going. And I'm like, oh, this guy definitely has light on. Yeah, bro. Yeah, yeah, yeah. Dude, I don't fucking get why you go on light mode every time. Like, what the fuck? Like, your eyes don't like hurt? Yeah, it's mainly girls too. Fucking crazy. Dude, it's so superior, bro. It's so superior. It's always such a cool conversation starter. I swear, bro. Every time I'm like hanging out with a girl, like, oh yeah, I haven't seen you like mode. And I explain it to her. I'm like, oh yeah, it is so risk, bro. Yeah, I give him Marcus Aurelius quote before. For real. Oh, dude, you remember that email when like I got caught for GPT and he said that? It's funny. No, like remember it was like last year. I got caught for AI. I sent like the emails, but I sent it was like a Marcus Aurelius quote or some shit. Yeah. I don't know. I'll just keep it on light mode the whole time. It's better for your eyes, bro. Can you have all that light?
Tesla, sorry, Q's coming into high day.
Crazy, but I think it's probably worth it. Only in hindsight, it's just...
Selling some Tesla here from VWAP continuation.
Yeah, Tesla's coming into 265 here. Trying to make a push up to high of day in 266. Also, I was gonna say what's it called? I was gonna say I'm gonna hop off and I'm gonna sign in and get the 11 a.m. started.
Oh shit, it's already 11. Damn. Alright, so you can.
Yeah, I know. And I was gonna say we've
Time
been
flies,
dealing
bro.
with. You're welcome. Yeah, yeah. Yeah, I would say it's also sorry. We've been dealing with support stuff at the moment. So I've been kind of just on and off the phone with Jeff. All right, perfect. I got everything. I'm gonna go ahead, get everything started, and then I will see you guys in there.
Alright, see, man.
Did you guys short that Tesla? Well, you guys thought that was a lot of... How much risk was that worth, like, shorting that pretty much a lot? I don't think it was worth it. I don't know why I took that.
Recording in progress.
Good morning, everyone. Looks like my name is Jeff Holden now.
Not really, Dora was so loud.
Hey, Dr. S. I was gonna say I know I kind of jumped the gun real quick, but Jeff said he was gonna start the meeting, but I ended up starting it before I actually saw that message, so I'm not too sure if he said he'll just join, but he should be in here shortly.
Okay, sounds good. So just let me know when you want to begin.
Think we're ready, Dr. S.
No, yep.
Oh, there he is.
Jeff,
Okay,
did you want me to make you host or share screen, or do you want me to run the
No,
charts?
no, I don't need a share screen. And we'll just be going for a few minutes here.
Yep.
And
So we asked Dr. S, and my camera's just starting. There we go. We asked Dr. S to join us because we we have maybe a little bit of a catalyst this afternoon. And some of the people that you work with that manage 3 commas, they have pretty big books. Some of them might be paying attention to some of the catalysts that are coming out this afternoon, and they might have some thoughts on structurally how they're thinking about some of the things that could be happening in the market. And because we're so fortunate to have Dr. Steenbarger, who has experienced many more markets than any of us, has experienced many different types of trading, much more than any of us, through the people he worked with, or works with currently, and has worked with in the past, and also understands market participation in a way that so many other people just miss. It's really fascinating to think about how whenever you read something on Dr. Steenbarger's blog, Trader Feed, which is an amazing blog, he's able to think about things in a perspective that really allows us, even as intraday traders, to think through, okay, what are other participants doing and how are they acting? And what indications do we have that they're acting that way? And Dr. Steenbarger is very good at that. It's not just people spewing out, this is what's going to happen in the market. It's literally almost every single post. I think every post is probably grounded in research. There's one post that I love in particular, and I think Dr. Steenbarger, you've talked about it previously, and I'm just going to call it out. Actually, I'll leave it, but it's a trading psychology related post, and it's don't be the markets, and there's a specific term that you use. And I remember that from a long time ago when I was going through Trader Feed and seeing that, and it was a very enlightening post, but it sounded like it was quite controversial with feedback and stuff like that. But I think it's a good perspective of what we try and do as traders every day. We don't try and put ourselves in a position where we're reacting to the market. We try and put ourselves in a position where we're reacting. We try and put ourselves in a position where we're prepared, and we can sort of anticipate a little bit of what's going to happen potentially. And really, that's just scenario planning. And that's what we're getting into. So with Dr. Steenbarger today, we asked him to join. He was nice enough to join for a short period of time and just give us a little context about what are you seeing, what are you hearing, and then bigger picture, what sort of market could we be walking into depending on various ways that this plays out?
Wonderful. Thank you so much, Jeff. I appreciate the introduction. And please read Trader Feed before this afternoon, because I'm charging 25% extra after that. We won't go there. Okay. Very good. All right. So let me give a little perspective. I know we only have a few minutes, and I'm sure, Jeff, you have a lot of stuff you want to be going over. Lots going on in markets. But I'll give you some perspective based on the people I work with, particularly in the hedge fund world. One thing I've mentioned to the group is that it is so important to know as a trader, who are you taking advantage of? Who are you making money from? Yeah. And I believe that the best intraday traders, the ones who are scalping and trading short-term moves, are benefiting from the fact that larger participants, like those in hedge funds, can't take as much risk these days as they used to. If you go down 5% or more in your account at a hedge fund, you're in trouble. And so what does that mean? It means that on average, portfolio managers and teams can't afford to take a lot of heat. And that sets up scrambling out of positions, being on the sidelines. You can take advantage of their risk aversion because you and I can be quicker than them. So it's in that spirit that I offer these perspectives. Okay, if you can't afford to lose a lot of money, how are you going to be positioned going into this tariff announcement? Flat. Yeah, exactly. You're not going, yeah, small or out altogether, as Darius is saying. Absolutely. You can't afford to take a big bet and be wrong. So, right away, the perspective I want to share with you is that there is a lot of money on the sidelines potentially that could get involved. So, whether the announcement goes one way or another way, there could be some real movement, and not just, a short-term movement, but to deploy all that capital would take place over time. So we could see a decent move coming out of this, depending on the nature of the announcement. Now, two things here. It's not just the announcement of the US tariff that's important. Okay, so let's say they decide to simplify it and 20% across the board tariff, but they soften it by saying, we'll be flexible. And if other countries play nice with us, that could come down. By itself, that would probably be taken as a good outcome, certainly better than it could be. But notice that's not the only thing that's going on in the world. There's still the question of reciprocal tariffs. How will other countries respond? And will they impose more tariffs on us? Will we see the start of a trade war? So the announcement later this afternoon is not the end of it. And if there's retaliatory tariffs, how does the U.S. respond to those? So this could be an unfolding story. It's not necessarily it's the end of the beginning. Yeah, exactly. It's just the first stage of what could be an ongoing set of developments. Okay, so put it in perspective that way. The second thing that's really important to recognize is that the recent stock market has not been trading simply because of tariffs. We're trading the way we're trading because of anticipated recession. Now that's important because we can gauge whether markets are anticipating recession by looking at other asset classes. How are rates performing? Take a look at the 2-year Treasury rate. The yield has been going down, 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 down. Why? Because there's an anticipation that the central bank, the Federal Reserve, will cut interest rates and will have to cut interest rates because there's going to be more weakness. Okay, so near-term risk, as Greg is saying. Okay, so that's the first thing. Second thing, what's been happening is, I think as we talked about before, to the US dollar. You just look at $ DXY. What's been happening to the US dollar? Down, down, down. Stocks have been down. Dollar's been down. Yields are down. Now, in addition to all of that, what have growth stocks been doing relative to value stocks? If we're anticipating a good economy, then growth should outperform value, right? But in fact, the weakest performers have been the Mag 7, have been the tech stocks that have been the highest performers. Growth has really underperformed value. So all of these markets together are fitting a narrative of recession to come, recession to come. Now, we don't know how deep that recession might be. We don't know how proactive the Federal Reserve might be. I mean, what if we get big tariffs and that causes inflation, and inflation makes it harder for the central bank to lower interest rates? Ouch, that starts to sound like stagflation. That starts to sound like the 1970s. You remember that well, right, Jeff? Well, I don't know about 1929, as Oliver was saying, but certainly, the lines to the gas stations, absolutely. I remember that. So anyway, we don't know how significant a recession might be, and that's going to unfold. But going forward, you not only want to keep an eye on the tariff news, you want to keep an eye on the US dollar, keep an eye on interest rates, keep an eye on growth versus value, keep an eye on US stocks versus the stocks in other countries. I like EFA, that ETF, which basically is Europe and Far East. VGK, that's Europe, the European stock markets. But if we're having a unique recession in the US, then our stock market should be underperforming overseas markets. So take a look at all those things. Take a look at the big context, the big challenge. And Jeff, I think you can appreciate this, is that we do such a good job of training traders to get to the micro level and look bar by bar by bar and see things setting up. And when we look through the microscope that way, bar by bar by bar, we can miss the bigger context of what's going on.
Yep.
So the reason they bring me here to rant and rave, but I promise I'll take my meds after I'm done. The reason they bring me here is to offer a little bit of that larger perspective. Yeah, exactly, Jessica. Missing the forest for the trees. That's the real risk. And so to be a really good trader, you have to zoom in. You have to look at supply and demand bar by bar by bar, but put that into the larger perspective.
And that's the whole game, really. I mean, we have to be able to adapt, and ironically this week and over a 2-week period, we started this week, and so a fortnight of setups, essentially. So we're talking about setups this week and next week. It's all about very detailed setups that occur for the stocks that we trade, not the trades themselves, because the trades are the more granular element to it. That's the refinement, and that's really the execution rules. The execution rules come in the trades themselves that are essentially dropped into our lap. Our belief is the market is an opportunity generating machine. Again, we have to be able to understand what that opportunity contextually is, to be able to adapt to understand what the setup is that's being traded, and even more importantly, what trades are being offered within that setup. So we'll spend a little more time today going through it, and then the rest of the weeks. But given the catalyst that we have, it's a pretty exciting time to not just look at US markets, but look at these various risk assets and look at the setups that are occurring. I don't remember gold being in an overextension like this in quite some time, but in reality, is it overextended if there's a fundamental catalyst, or is it just trending?
Great point, Jeff. And gold is such an excellent point, because it's a safe haven in times of market crisis. But notice that gold is denominated in US dollars when we trade it here. And so when you are saying gold is going up versus the dollar, what you also are saying is that the dollar is really going down versus gold.
Yep.
Yeah.
Which is exactly why you have to parallel those setups. Because if you look at these things too isolated, which is really where we specialize. Let's be honest. We specialize at the shortest. We are faster than almost every market participant out there. If you put everybody in a continuum, everybody from the longest of long-term investors to the shortest of high frequency traders, We are all the way down here of all the market participants. But we do have to understand how a lot of those participants are acting and thinking and behaving, and then make adjustments to our trading. And that's where people tend to have the biggest struggles is they say, what I've been doing all the way down here on this end of the curve has been working and I've been having success. But then all these participants over here completely changed the way that they were acting. And so as a result, what I'm doing down here has shifted. And I'm not shifting to respect the fact that these participants have changed over here. You know, the participants on the shortest end are almost always going to be acting the same way. The market makers, the really high frequency traders, they're going to tend to act very, very similarly. But as you go along this curve, as those participants start to change, that's where you get these changing markets. That's where people tend to get the most frustrated in their trading because something that was working for so long stops working. And when we have a giant catalyst like we do, and what Dr. Steenbarger was saying, which is we've witnessed it, where there's a lot of money being pushed back and forth right now, but people are waiting for information. And not just the announcement today, which will be one catalyst, but then the response to the announcements, which will be another catalyst, and then the data following the responses to the announcements as they play out, which will be a third independent catalyst. And so we have to be aware of these catalysts because that's what these people all the way down here on this end of the curve are paying the most attention to. They're not, I doubt you have very many people who are saying, wow, MLGO really blew off to the upside. Or maybe some people are talking about CRWV, CoreWeave, the IPO from a couple days ago. Maybe some people are talking about that. I doubt anybody you work with is really worried about what NMAX is doing, you know, the recent IPO. But these are all things that we get opportunities to consider as long as we respect the fact that, okay, the players down on this end are likely going to change the way they're playing the game based on these upcoming catalysts. And it's our job to take advantage of the opportunities presented by the market at that point. So that's all we have to do.
That well said, Jeff. I'll just offer a little addition to that, and that is when the people at that longer end of the spectrum get involved, of course, they're managing much more money, so we see more volume in the market. So monitoring volume is important, but we know that volume correlates with volatility. So one tell for how institutions are behaving is how much volume we have, how much relative volume we have, and how much volatility we see, because that will affect our setups.
Yeah.
Now, what happens? See, I can ask this question because I started my career working at a market maker in Chicago. What do the market makers do when suddenly a flood of volume comes in?
They pull.
They get the F out.
Yeah,
absolutely. They get out of the way. That's exactly right, Oliver. Yeah, they're supposed to make a market. So they're going to, ideally, they're going to buy the bid, sell the offer, right? But they withdraw liquidity. Perfect. So what happens when you have volume coming into the market and liquidity that's being pulled out? Things can move so much more on a short-term basis, much wider ranges, much more volatile. And so our setups don't behave the same way as they did when the VIX was nice at 14 or 15, that kind of thing. So that's something to watch and be sensitive to going forward. And I would argue that it makes sense to study your setups anew. Study your setups fresh in the recent market to get a sense of entry, exit, and how things behave, rather than just rely on what you may have studied when the VIX and the volume were much lower.
Yep. And we'll get into that a little bit now. Dr. Steenberg, I know you probably have to get going, but you're more than welcome to join us for the rest of the meeting. There are some really interesting setups for us that we want to talk about today. So let's get into the one that's totally parabolic right now, Tesla. Let's start with Tesla, please, because they had the delivery numbers and it looks like they just had news. I don't have my news sources up, but the way it's trading, it just popped almost 10 points. So Caleb, can you start running Musk news? What's the Musk news? Musk will leave soon. There you go. That's a huge catalyst for the stock. So I was long it off the second chance and then sold it into the meeting. So I could be here. So I'm happy. I hope some of you stayed with it because that's sort of what happens when you have these things. So when you have really good trades that's set up. All right. We're gonna have to zoom out a little bit on the chart.
Yeah.
Perfect. Okay.
Oh, to hear for
So
yeah,
that's
delivery
big.
numbers.
That is big news. Wow. Okay. Yeah. I'm having some FOMO right now, and that's okay. So wanted to start by talking about this catalyst because this catalyst was fascinating, wasn't it? And what was the catalyst initially today? By the way, I would not short Tesla off of this catalyst. But what was it? Yeah, the delivery numbers came out today. So what was the bigger picture setup? Let's zoom in on the daily and let's start with the bigger picture setup. What was the bigger picture setup?
It's an overextension.
It's an overextension. Why is it an overextension?
The stock is down like 45% from the highs.
It was an overextension down at 220, but then it resolved. Right? Like it's an overextension when the time gets very aggressive, but it's not an overextension when that kind of resolves a little bit. So what was the setup coming into? Because this is something you want to do all the time. You want to say, what was the setup coming into a catalyst? Then there's a catalyst. And then I want to recognize what the setup is after that catalyst. Just like what we talked about with Dr. Steenbarger. This is the way funds think. They think, what was the setup coming into the catalyst? What's the catalyst and how does that impact the news? Or how does that impact the setup? I'm sorry. And then after that, what's the follow through element of that, right? So what was the setup coming in? Prior to the news this morning, what was the setup coming in? What was it?
I think it was volatility in range.
Why would it be volatility in range?
Well, we have been putting a range since we put it at bottom in March. Then I think we put a clear top of that range. It's about 275, 280. And then we have seen some volatility, just testing just the lows of the range. But I think just overall, just seeing the range and the volatility involved, that's why I lean towards that setup.
Yeah, I would agree with that. I think that's valid, right? We have a period of time, and you can, here, I'll mark it off. So we have, first of all, in order to have volatility in range, you have to define a range, right? You have to have a range first. So we have a period of time of 1, 2, 3, 4, 5, 6, 7, 8 days in a range, right? And the high of the range could be here, and the low of the range could be right around there, right? Everybody comfortable with that as an idea for the range? And then the question is, do we get volatility? Now, typically in volatility and range, and you have to separate a little bit of your perception on this, but typically in volatility and range type setups, how often do you test both sides of the range? Usually you test both sides of the range quite a lot, right? And how many times have we tested both sides of the range here? Have we tested both sides of the range a lot, or we kind of pressed up to the highs and then sort of gapped down a little bit? What do you think, John?
Sorry, I'm just watching the chart here. Yeah, I think that so we tested the top of the range a couple of times, and then on the lower side we kind of made a higher low.
Yeah, so I honestly don't think we necessarily were volatility in range as we're categorizing it appropriately. I think we were just ranging, right? And it's tough, but you have to distinguish the difference between the two. Tesla's trades in a giant range, but it trades in a giant range initially. John, you can go back to trading. I won't ask you any more questions. But volatility in range typically is up, down, up, down, up, down. This is sort of just kind of ranging, right?
Yeah, I have a question about this setup.
Yeah, go
So,
ahead.
defining the number of how often we touch the ranges, but do we pay notice to the volume within the range? So as we can see,
You can.
yeah, this is quite an elevated volume within the range. So I think that could be one more definitive for a volatility in range, right?
It could be, but volatility is defined much more so by what?
By the
Volume
moves,
or movement? Yeah,
by the movement, yeah.
more by movement. And so I think it's a situation where it's easy to say it's volatility and range, but if you did this exact setup on not Tesla and you did it 1,000 times, would you categorize this as volatility and range, or would you consider this ranging? If you removed 2 decimal points and this was $2.75 stock, would you consider this volatility and range or just ranging?
Yeah, I think just ranging.
Probably
Depending.
just ranging, right?
Yeah, depending on the movement. Yeah.
Yeah, probably just ranging. And so this is why you want to have this process. And these are the sort of conversations you want to have with yourself, because you don't want to assume it's volatility and range when it's just ranging, right? The two will be very different. And more importantly, the types of trades that you'll be looking for will be different in those two. One is saying I have to be very selective, ranging. And the other is saying I can be very active in this, which is, volatility and range. This is a great example of you don't necessarily need to get it right, but you want to be aware of the differences. And so I was really happy we had this example, and now I'm even more happy because now we have a third example, right? So we can go into our different setups, and we have volatility and range. We have ranging or balancing, right? And then we have fresh breaking news. I think the difference between ranging and volatility and range is the number of times and the fluidity, which is a tough thing to measure, but the fluidity in which you're trading from the lows to the highs. Does that make sense?
Do you have like any sort of, let's say, for example, like ATR metrics to help you differentiate better between ranging and volatility and range?
I don't have any, but that's a great way to do it. With Dr. Steenbarger here, Dr. Steenbarger, what indicators might you consider if something's trading volatility in range? Did we lose Dr. S? Oh, we lost Dr. S.
I was muted.
There he is. Okay, great.
Okay. Yeah. Normally in a range, you have relatively uniform volume. In other words, if you get much greater volume, typically, again, that correlates with volatility, you'll break out of a range. So right away, if it's volatility within a range, you should see volume within a range. You should see RVol within a range, and it should behave in that range-like fashion. And that's why getting more volume on a move out of the range can be a very good setup as far as a breakout trade.
And that also has different expectations for if something's breaking out of volatility and range versus breaking out of range. We have a totally different standard for the volume that we're expecting.
It's a great point.
So what's fascinating about right now is we're trading to where? Where are we right now? Pretty close to the top of the range, right? So now we get to see if we hold this range on increasing volume, what would we expect to have happen? Plus, we have a really good catalyst too, don't we? So we would expect there to be a really strong, sustained break out of range. This is about as good of a setup as we could see. And I'm not saying that it's going to work because we have these contrasting points. We have a catalyst coming after the close. We have a setup where price basically gapped down on not great news, but then was bought, right? So we always talk about when you gap down on bad news and are bought, that is something to pay attention to. And then we have a really positive catalyst, which is the CEO who's been dipping his nose in all the wrong places, apparently, is no longer potentially going to be doing that and going to focus on his core competencies, which is, you know, helping us have a brighter future or whatever you want to do it. I don't want to get into political commentary. That's not why we're here. But when you have a CEO that has been sidetracked, and if you took it against any company, when you have a CEO that's been sidetracked and then can go back to focusing on what he does well, a lot of times that's very good for a stock, right? Just bar none. So, you know, it's just very good for a stock. Plus, on top of this, you have a market that's really strong. So this thing should go to the moon, basically, is what I'm saying. This breakout should hold and go. Now, it could. But if it doesn't, that's something that's very fascinating for us to pay attention to over the coming days. Because it's got every reason to go up at this point. And it should. But if it doesn't, that's something that we can pay attention to over the coming days. The way I think Dr. Steenbarger was trying to lead you a little bit with that question, but you are really good at understanding cyclical markets. That's a big part of sometimes you'll have cyclicality with volatility and range where it goes up quickly and it gets to overbought levels very quickly. And then it comes down and gets to oversold levels very quickly. And all of that's occurring within a defined range. That's a fascinating thing. Now, if I look at this chart in this range, I don't see that extreme overbought to extreme oversold. I just don't see that. And that's how I would personally define volatility in range. I always think of volatility in range as it's getting chased to the upside, and then it's getting chased to the downside, and then it's getting chased to the upside, and then it's getting chased to the downside. And in this circumstance, I don't see that. So what I do see is a stock that's ranging, it gapped down into the low of the range, and then it was bought, and now it's at the high of the range with a positive catalyst. Those are three different setups. Ranging, gap down into the low of the range, or gap down into key support, right? Now trying to break out of the range, or you could call it volatility in range when it goes to the lows and then it quickly trades to the highs. But then it's also a breakout of key support. So 4 things. And then even more, we have a fifth, which is what? Fresh positive news. So you're talking about 5 setups and it's 11:35 in the morning. We've been trading for 2 hours. We've been trading for about 3 if you count, or I guess 2.5 if you count the news. But we've had all these different setups that have occurred. So this is a great stock for us to pay attention to because of when we're learning setups, because we've had all these different setups occur and we can look at each one, what happens in each of these setups. So let's methodically go through it and then we'll end it. I thought the second chance was off of the 260. I unfortunately don't know how I would treat it from here. Probably just a straight up breaking news play, with that consolidation above 275 being a decent buy. That's probably about the only way I could think about it being a breaking news trade, right? I don't think there's a whole lot here. I think it's a really good breaking news trade on that catalyst. And if I wasn't in this meeting, I definitely would be involved. All right. So, but I'm in the meeting and I'm not going to chase it. I don't know what to make of it. It's way too late to chase in my opinion. So thank you. Okay. Let's talk about this from the setup perspective. So it was ranging initially, and then it gapped down into key support on negative news, right? So it had breaking news that was negative. They missed on their delivery numbers by a decent amount. And then it had, but it gapped down where? Right into key support area. Did it ever break below the lows and hold below the lows? No. Not even on that little opening gap give and go did it get below the lows, right? And then it reclaimed VWAP, held up a little bit, and started a little uptrend. It retook that undisturbed price at basically 260, 263. It went above that price, so the setup changed, right? No longer was it a negative breaking news. The price action invalidated that being a negative breaking news trade. So the setup changed, which opened us up for the VWAP continuation, which also correlated with the second chance scalp that fired on the scalp radar. So
Just
the setup changed. Yeah, go ahead.
can I ask you a question just about the VWAP continuation?
Yep.
Since because I was a bit confused here. Since we took that 263, the undisturbed, then we tried to we kind of rejected a 2-day VWAP. And then we orderly pulled back into VWAP, but VWAP happened to be just below that 263. So would you invalidate or just downgrade the importance of that level because of the price action like you're seeing there? I just had conflicted thoughts about it, about the VWAP continuation, just given the price point where it found itself.
I'm sorry, I'm a little confused by the question.
So basically, the stock kind of met resistance, or kind of went back.
It went to
that,
2-day VWAP, is what you're saying.
Yeah, but then once it pulled back below 263, it's kind of below that undisturbed price again from the delivery numbers.
But did it, if a news catalyst is significant, does it ever really go back to that undisturbed price?
No, it shouldn't.
It shouldn't, right? And that's the whole thing. If it invalidates that price, you have to almost think that the setup has changed. Right?
Okay, yeah, that makes perfect sense.
Which one is more important? The 2-day VWAP on this or the undisturbed price of a fresh breaking news catalyst?
The undisturbed
price.
100% the undisturbed price matters more, right?
Yeah.
So at that point, the setup has changed.
And I was going to say the 2-day VWAP is taking all of yesterday's price action into consideration, where the news catalyst has nothing to do with any of the price action from yesterday.
Correct. So I think it just happened to fail right there. You know, it wasn't like I don't think it was anything more than it just kind of happened to fail there. We had that spike high in Qs at the same time and SPY at the same time, and then they kind of rolled in. But
yeah, they rolled in at the same time. Yeah,
yep, exactly. So it's just sort of like this is the setup that you want to see for a second chance or a VWAP continuation style trade. This is exactly what you want to see.
So basically, once we have that catalyst, I can really, especially, I think this was like significantly bad if we didn't sell on that. I think that's basically like changing the story, right? So I could assume that, let's say, that 9 o'clock bar is like a very important point from which the previous day's action, I can kind of downgrade that as anything from 9 o'clock onwards will have more relevance for today's price action.
Yes. Yes. You use that bar, right? So that's what you do, I think. So you use that bar as the most important piece of information. So this is something that we really want to pay attention to moving forward, because now we have multiple setups, right? And we're very fortunate as intraday traders. We can go back to our seats and we can watch this. The breaking news trade kind of played out. Roberto, I hope you caught that. But the breaking news trade kind of played out already. But now we can look because the setup's changed. We're not sitting here having to make adjustments to our positions based on the setup changing. We're fortunate to be able to sit there and just wait and see how this price action plays out now. We're fortunate to not have to say, I think these delivery numbers are good or bad. We can see what the price action does and then make a decision off of that. We can allow the setups to change. And as the setups change or confirm that they've changed, as more information comes in, we get the opportunity to just make trades that literally fall into our lap, like the second chance on the VWAP continuation, like the breaking news trade when it comes in. We can respond. We have so much edge in our ability to be nimble and be snipers, as Dr. Steenbarger's talked about a ton. We can learn the setups that make the most sense to us. And then the trades within those setups that we look for. And we can look around, scope the field, find those opportunities, and take advantage of them when they show up, and really work to put ourselves in a good position to not take the ones that aren't there. If you're a sniper, your biggest asset is your ability to be stealthy. If you give away your position as a sniper, what happens to you?
I think we lose our edge.
Yeah, you give away all of your edge. You give away all of your edge. As traders, our job is a lot of sitting and watching and observing and understanding the setups that are our edge, and then the combination of trades and setups that can really get us going in the right direction. And once we have that, we can put ourselves in really good positions. Now, all of the price action from today, could it be invalidated at 4 o'clock this afternoon?
100%, yeah.
Why would it be invalidated at 4 o'clock this afternoon?
Well, in regards to the overall market context, because we have, I think, still a level of uncertainty. I think we'll provide more details on what the tariffs entail, and then the response to it. So I think it's a huge catalyst for market-driven names.
And even more importantly, what did Dr. Steenbarger say? That a lot of the people that are running big money, you know, that longer end of all the market participants, what are they currently doing?
Well, they're gauging the possibility of a recession and looking at as much information from different pointers to find out whether that thesis is about it.
But they're certainly not going YOLO long, right? Or YOLO short right now.
Yep.
I don't hear any of them on Twitter talking about their positions. So, you know, like, we want to be very aware that there's this whole group of very big market participants that are waiting to play. And we want to respect that fact as much as we possibly can, because tomorrow we could come in and the setups could change. The context of the market could shift. It's so important for us to listen for the rest of the day today and listen tomorrow. And we've talked about these 9 setups, and we'll go over them one more time and then we'll wrap for today. But these 9 setups are breakouts, trending, failed breakout, balancing, right, or ranging, excessive excess or overextension, gaps into key levels, day 2, day 3, fresh breaking news, and volatility in range. I hope that everybody has a great rest of today. We will be doing reading the tape at 1 o'clock today. Just so everybody knows, Rose had a problem with her back, and she needed to go to the emergency room, actually. So she will not be available today or likely the rest of the week. Our thoughts and prayers go out to her. The best way to connect with someone if you need something is on Discord right now. So you can reach out to Caleb, who's on Discord, right, Caleb?
Yes, I am.
Yep. Okay, great. And I'm going to pitch it one more time because apparently the rates are going to go up. And I thought somebody in the comments had a really funny thing, which is tariffs are even going to impact the cost of Trader Feed. But thank you, Dr. Steenbarger, for joining us. Please, please, please go check out traderfeed.blogspot.com, I think. Is that right?
That sounds about right to me, Jeff.
Okay, great. So please check it out. If you just Google Trader Feed, you can find it. But this is a great resource for people, okay?
And I would say yes to everyone in the meeting that are asking. Yes, it's Caleb F42.
There you go. Thank you, everybody.
Thank you, Jeff. Thank you, everyone. Hope everyone has a good rest of the day, and we will see you guys for Tape and Playbook today.
very
Recording
difficult
in
when,
progress.
you have rows out. I apologize for the delay. I want to get into something that I think would be very good, which is a live reading the tape, particularly with a focus on Tesla. I hope everybody's okay with that. There have been some really, really great trades today, but I want to do a live reading the tape on Tesla just because it's in a moment right now where we have a lot of things going on. So I apologize for anybody that wasn't able to join yesterday. We had some just random, just everything goes wrong, and that's okay. So let's get into Tesla, and let me share my screen. There we go. Make sure I'm sharing the right screen. Looks like it. There we go. Share. Everybody can see this screen, right? Let's make sure everybody can see that screen. Okay, great. So this is the first thing that I'm thinking about when I'm coming in and trading Tesla. And I'm not saying I'm going to trade it right now, but in general, this is the first thing that I'm thinking about coming in and reading the tape. And this is an important concept to make sure that everybody's starting in the right spot, right? And this is just something you need to do right away as soon as you pull up a tape. As soon as you pull up a ticker, or as soon as you pull up anything, you want to conceptually grasp what's happening in this. So let's look at this stock, and I apologize for the million lines that are going on, but basically this stock went from the sort of the low end of the range to the high end of the range very, very quickly on a positive news catalyst, right? Positive news catalyst can be very, very good. This was a very good news catalyst. You can see that increase in volume. I actually wanted to do the second chance that occurred here and then the breaking news, but I couldn't get Trading Sim to launch in the right way. I know they're having issues with their data provider, their service provider. So that's probably why. So that's why we're coming into a live reading the tape. But there was this really, really good trade on the second chance that was off the scalp radar. And when you get a combination of things, when you can look at something and go, oh, that's a second chance. Oh, it's also a VWAP continuation. Does that make the trade better or worse? I mean, if you can line up two things and you can recognize it's this and that, that just makes it so, so much better, right? And it should be way obvious too. It should be very clearly obvious when that change occurs. And there was actually a moment on the tape when this candle happened at 10:39, and I remember it because I was watching the tape, and so we'll have to go back. Twice as good. I checked the math. Nice, Craig. Where that tape just changed entirely. And when that tape changed entirely, like your stop just goes right below the low, right there. And once in a while, it'll roll over, stop you out, and then rebid and go, and that's fine. But it goes right below the low. And then I had to sell it coming into the 11 a.m. meeting because I was like, well, I don't want to be watching this during the 11 a.m. And then obviously we had the news catalyst. But if you notice this is a really important characteristic. If you notice this, we were all the way up and above the highs and holding above the highs. That's a very great way to just hold your position. And then when you have the news come in and the volume come in, you're making an entirely different trade at that point. So you're making a news trade. It doesn't even mean you have to add to the position. You can just hold it, but you have to recognize you're making a news trade. The worst thing you can do is sell into this first up move because you're like, wow, that was a really good up move. I didn't expect it. And then all of a sudden it goes all the way up here or something like that. So anyway, have we had a really epic move in this stock today? I mean, just an epic move in this stock, right? So now I'm thinking less about this being a big move out of range. Like maybe it is, but I'm thinking less about this being a big move out of range and more about this being in range. And that's where I love reading the tape, because you can actually, when something's trading in a range this big, you can kind of pick things off. And look, you can catch a point, 2 points, 3 points pretty easily sometimes. And that 0.2 or 3 points doesn't seem like a lot, but it can actually make your day sometimes. And there are times that you're building your, yeah. The White House press secretary said the story was garbage, but I don't care because the response to that is what matters to me. This did not reverse, right? But I don't expect it necessarily to break to the upside. So this is where you can really read the tape and start to figure things out. So you notice that bid, I'll put my eyes where the cursor where my eyes are. You notice the bid that just skipped like 30, 40 cents, right? Now I'm really trying to gauge how strong this bid is. Is this bid real, or is it just going to be skipping around, right? This is how ideas, I think, get generated in the best context, because you can recognize like the combination of the setup, which is this was a big move already. We failed. And then, you know, it's a very interesting kind of setup. Now, if I'm reading the tape, it's just not that. It's not that I'm looking for a ton. I'm just looking for little moments where the buyers are going to lose and then sellers are going to win, or the sellers are going to lose and the buyers are going to win, right? Did you notice the difference there when we tried to skip up into that 283, like 40, and then we just dripped down, and then you can see the buyer stepping right back in, right? This is a dangerous time to be reading the tape, because what's happening? Kind of mid-range, right? There's not a whole lot going on. This NMAX is getting just taken to the woodshed today. But I can pick off stuff by simply looking and saying, okay, the buyers are winning right now, right? The buyers rebid that 283.10, 282.80, and they're pretty strong actually. But then what happened? Did they get it higher from there? No, they didn't. And so now I'm thinking that this is probably getting to the top of the range for a little bit, and then it's probably going to range in about a 2-point range or something like that for a while, and then maybe set something up into the close. But I'm apprehensive to say it's going to set something up into the close because of just the dynamic. So I can put in the back of my mind 283.40, right? That was that price that it really looked like it should have broken above, and then it failed. What are the options for this stock right now? I don't mean the option prices. What are the different ways that this stock could be trading right now? Well, it could be just trending to the upside. So every time it dips below 282, I want to see the buyer, or 283, I want to see the buyer step in and then clear it through like 283.50. That's my default, that it's trending. So I'm mentally thinking every time it dips down, how quick are the buyers stepping in? And they've stepped in a couple times, but are they stepping in right here? Here they come again. And if I start to see the seller step down, then this stock is likely more ranging. This is exactly where I think it should break higher from here. My eyes go right to the offer. I definitely think this should break higher from here. There should be a decent volume candle. Why can't it break higher? It almost feels a little bit tired, and it's not saying that it's going to fail, but if it starts to fail, I could short against 283, like 50. And I could look for sort of a quick, like, kind of downtrendy type move. I would consider taking the break of the highs here. But it would need to be on massive volume, so almost like a new news story, right? But you notice how we just kind of are starting to fail. Now, I don't even need to predict that that's the high. I can just watch the tape and be like, okay, that 283.40 is very interesting. And this is where reading the tape can get dangerous if you're not careful. Because if you're short here against 283.40, what happens if buyers step right back in? Well, you have to cover, right? You have to cover quickly. So the easier thing to do is let that first move happen and then see it try and lift again, and then look for the sellers to step back in, right? It's a higher probability trade with a little lower EV if you're thinking about $2. But you notice we just had that dropout. So now I get to see, are the sellers still there? Or did the buyers just step it right back in? Right now, the sellers are still there. Like every time we drop, the sellers are stepping down. So I'm watching both the bid and the offer. But right now, they're definitely starting to step down. I'm not saying that this is a short yet either, because this is something that you need time to sort of play out on your side. But I like the fact that the sellers are stepping down and they're not really letting it lift, right? You see how they're holding 66 lifts, but where does the bid go? Does it go above that 66? There it goes. Nope, right back down. See the sellers kind of stepping down a little bit. Now I'd love to see a little bit of a consolidation right here. This is a great trade. So you're looking at my trading platform right now. It's very similar to DOS Trader Pro. I mean, it honestly feels like, okay, now that we've had a first down move, I can look for a quick pop to short into. There are a lot, like if I was trading this, I'd probably already be short a little bit, or maybe I wouldn't even be worried about it. But, you know, if I was just directionally trading it, it would be fascinating to see. But what I'm thinking is if it goes down to like 281.50, well, right here, and then tries to kind of grind its way back up, I'll look for kind of a continuation short, just down to 280, nothing crazy, but risking 50 cents, 60 cents, and then looking for kind of, you know, $1.50 or something like that, right? You notice how I'm using the tape and not talking, the market's moving down too. There you go. I'm not watching that on that screen, but you notice how I'm looking at the tape, but I'm not trying to pick a top here because it's a pretty dangerous game. I'm actually letting the momentum turn to my side and then trying to pick a continuation moment in it. Picking a top is a really good skill to have, but it's just something you want to be very interested in figuring out, is this the right thing to do? Ideally, honestly, I would like to be long this into the close, just playing for like a really strong close. And then I wouldn't take it overnight because of the risk, unfortunately. But I do think this is going to 300, and it's just gonna, the way it's gonna go there, it'll go there without me if it gaps up, and that's fine. But the way that these numbers changed off the lows, I think it's probably a good bet that it's going to get to 300 this week. So now we've had that little 3-bar, and I love these, this little 3-bar rebid, right? Is it not bouncing off the 2 bars of, I don't know what that means. Sorry. Now we've had this 3-bar rebid, so I can look for a little up and through move. So if it gets above, remember that 283.40, that's a totally different trade, right? What I don't like about it is the volume's awful on a relative basis. So it's kind of more likely chop than anything else. But if it does start to rebid, now I want to see the bidders step in. And I want to see the bidders kind of do exactly what we saw with the sellers, where the sellers like wouldn't let it lift, wouldn't let it lift. Now my eyes are on the bid and just watching, do the bidders let it drop at all? And look, I'm okay being late to this move. So here's where we get to see, are the bidders going to step in? And they stepped right in. Now do they walk right up through the sellers? Yeah, they're starting to. Again, I don't have a trade. This is just setting up for a possible trade, which would be like kind of a continuation move to the upside. And it would just be a scalp, that's all. Nothing more than that. But you can see the bidders trying now. They're really trying. So if they start to step up, this should be really good, and it really should almost explode to the upside. If it doesn't, it's probably going to fail and get back right down and start a little bit of a downtrend. So now I'm starting to see those buyers come in. Remember that 283.40 was the level from before. Now, think about reading the tape as this, right? I'm not talking about it going like $5. I'm just thinking it'll go another $1 or something like that, right? Like a little scalp here and there. And this is the sort of stuff that I find fascinating because you notice how we talked about what I really needed to see for the short or what we really needed to see for the short, and that didn't play out. Now we're talking about what we really need to see for the long, right? We're talking about these things as if they might happen, but we're not married to the idea that they will happen. And when something's trading in this way, I might have 5 or 7 or 10 different versions of the same idea. Well, this one looks like it should go, right? But if it doesn't go, I don't have the trade. This is a concept that you really want to marry yourself to when you're looking at tapes. Is you are going to be thinking, if when you're looking at a setup and a trade, if you have like a 6 or 7 to 1 ratio of how many ideas you look at to how many trades you take, when you're reading the tape, sometimes you can have like a 10 to 1 ratio of the number of potential trades you're conceptualizing that like kind of look like they might be setting up on the tape, and then the number of trades that you actually take based on actually seeing the tape do what it's supposed to do. Sometimes it's a lot less, but you know, sometimes it's 2 to 1 or 3 to 1, depending on how liquid the tape is. But you notice that rebid right there. So if I was going to take it long, if it does break the highs, I'm long right against that rebid right there. Let's see what happens. And then we're probably going to get cut off because of Bella, but because of the playbook meeting. But let's watch what happens here. There you go. You see that? You take that little scalp and look for the bidders to step up and through. You're looking for probably a point. And we'll see what happens here. The volume's coming in. This looks good. You have that target right there. If it goes above the highs, this thing's going to go to 284.5. If it doesn't, I'm quick to get out. Seeing a little selling. There you go, 284. Keep going, keep going. I'm watching the bid to make sure the bid's staying strong. I want to see the bid step up and through here. I don't like this drop. Why did I choose about a point? I don't know, just thinking about, there you go, nice rebid. Let's see it continue to go. The volume's pretty good. Thinking about 282.5 to 281.5, basically. So thinking if it gets above the high, it's going to go a point, maybe a little bit higher. Does that make sense? Thinking about this is like a little bit of a continuation. So it's, you know, again, not having unrealistic expectations, knowing that the stock is already pretty extended. Now I don't like it anymore, right? It tried to get up there and failed. So now I think the onus is on the buyers to like not lose here. I mean, I'm okay taking that trade. It's probably a short now. It's probably a short against the highs. I mean, I'm not going to take that. I wouldn't take that short given the context of the day. But like when stuff like that tries to fail, maybe not. Maybe the buyers are going to step in. But when stuff like that tries to go and then fails like that, a lot of times it winds up being like, all right, that was a good push, but it's not going to go higher from here. And the buyers are going to try and defend it. And if they can't, right, if it goes above 284 again and fails, that's like trouble. If it gets below 283, there's probably a really good scalp down to like 282.20 or something like that, right? This is all just reading the tape and honestly a lot of noise. But when something has enough range, you can kind of get away with some of this stuff and move around and stuff pretty easily. And your win rate's going to be pretty low, and that's okay. But I don't think it's a bad skill to do. Just watch a really liquid stock for a while and just kind of think about who's winning, what's happening on the tape, how are the participants acting, is there anything that surprises you? You know, like these are things that are great to do in the middle of the day, is just kind of watch tape with a couple of your friends and talk about what you see happening. You think time of day means probably exhaustion. No, I think the failed breakout means probably exhaustion. That's really what it means. All right, we're going to wrap there. Thank you, everybody.
Recording in progress.
All right, good afternoon, everybody. We'll, let's give about 30 seconds for everybody to get situated. Kenny G is up to bat today. Good to be back talking to you guys. Last week I was pretty sick. And the week before that, I was on vacation. But yeah, I ended up getting pretty sick. So feeling a little bit better, but I'll probably cough from time to time, but I actually feel better. But thanks to, sorry I missed you guys the last 2 weeks, but we should get back on schedule here. So obviously we have a big announcement after the close. President Trump is going to make his announcements on tariffs. We've talked about this since before the market has started going down, which is the market doesn't really like uncertainty. And the reason why the market doesn't like uncertainty is that companies can't make good decisions on how to invest, how to put money into R&D. Big money traders can't put a lot of money into certain ideas because they don't have a full picture. So you're seeing that. But one of the things that we've seen in this marketplace is a tremendous amount of outflow from the US into European and Asian stocks. There's been a big outflow of that. And if the administration does not make an announcement today and or over the next several weeks that provides more certainty, that doesn't antagonize our longstanding European partners who have big economies, who doesn't needlessly fight with probably one of our best allies, Canada, and doesn't needlessly fight with another historically amenable trading partner in Mexico, then the market isn't going to react kindly to that. And so we want to start to game plan what may happen at 4 o'clock today during this announcement. Now, I don't think it'll start on time. It never starts on time. So most of us will be sitting around our trading desks from 4 o'clock just waiting for this. And you're probably looking at a 4:45-ish to 5 o'clock start. It's not great that this announcement's going to come after hours when liquidity is a little bit lighter. But any reasonable trader around the world, any professional trader around the world is going to be at their trading station waiting for the announcements. And just to sort of give you a bit of a primer, the markets can react positively and negatively on these things. One, how much clarity do we get? If we would just get clarity, the market would like that just in of itself. Even if Trump came out and said, we are going to have an across the board 20% tariff on every other nation, we are not going to change our mind. This is what we've decided is in the best interest of the United States. Tariffs are 20%. I mean, that's high, but at least now we start to understand what the rules of the game are. So lots of certainty is we're looking for. And in that vein, if we hear from President Trump, we're going to start here. We're going to start with 20% tariffs across the board, and then we're going to see, and then we're going to talk to individual nations one by one, and we're going to figure out what the right tariffs are for each nation as we go. The market's not going to like that. Again, don't know what that answer is. That's another example of a lack of concreteness. And if you're a big money trader, again, you got to wait around and figure out what the tariff policies are going to be. So I'm going to be looking for that. The other thing is there's been whispers that Senate Republicans have been pressuring President Trump, and people inside the administration have been pressuring Trump to back down on his tariff demands and to come up with a package that's kind of a middle ground as to what he's been talking about. A middle ground being tariffs not as high as 20 to 25% across the board. If we were to see that, the market's going to like that. So if he announces, hey, I'm coming in lighter than expected, doesn't matter the reasons, the market's going to like that. The other thing we want to look for is there a paring down of the amount of countries that this is going to touch? So people a month ago were expecting there to be a broad-based global tariff placed for his economic policy. If today you start to hear that, hey, look, Canada and Mexico are off the boards, we're happy with what they're telling us. These tariffs are, and we're talking constructively to these other countries, particularly Europe. So as of today, the tariffs that are going in tomorrow morning are just going to be, and I'm spitballing here to make a point. They're just going to be on Brazil and China and Iran. A paring down of the amount of countries that we are going to be engaged in a tariff tit for tat with is going to be good for the overall market. Market's going to like that. Okay. There's also something to be watching for, which is if the announcement comes out and it's very hostile and we've been getting ripped off for so many years, we're not going to take it. I've been talking to some countries. I don't like what I'm hearing. You want to keep in the back of your mind, hey, what is the tariffed country? How are they going to respond? So there's two parts of this. Is the policy a little bit more restrictive than we had imagined, or less restrictive? And then is this policy more or less likely to receive reciprocal tariffs and more antagonism from other countries? And so if it's the case where you can just foresee other countries hitting us back hard, Europe, Canada, China, then the market's not going to like that. Does that make sense? And so, and I say all of this while we're going to be in the price action and getting a feel for how the overall market is going to react. And so we want to see, one, clarity. We want to see, two, a tariff policy that has been moderated. And three, a tariff policy that isn't as broad and doesn't touch as many countries as we had thought. And then 4 leaves open better days ahead that are easy to understand as to how other countries get there. And then 5 isn't going to cause retaliatory actions. So that's what we want. Does that make sense? Everyone have a clear picture as to what's good and what's not. All right. And so that's how we're thinking through that. There are other tailwinds I just want to put on your map that we need to be following as well. So Israel and the US, there are whispers that they're going to strike Iran's nuclear facilities, or the facilities that they're using to build out their nuclear capabilities, places where they're housing additional uranium, places where they're doing testing and studying. That is something that is becoming increasingly more likely. It is becoming increasingly a more dangerous situation. And so the administration has signaled that if Iran does not back down on its efforts to develop a nuclear weapon, that we're going to bomb them along with Israel. Right? That would be an escalation militarily that would spook the markets. It would spook oil prices. You've got months there of tailwinds, of headwinds, sorry, that you got to be keeping in the back of your mind. Additionally, the Democrats are going to propose a bill in the Senate today that takes away power from the executive to impose tariffs.
Yeah.
If not for emergency situations, and to define that this isn't one of those emergency situations. So there are smart people, there are people that study these issues and will say that President Trump, this is not a political statement, doesn't have the authority and ability to impose sanctions on another country, except if he is protecting our national security. And so President Trump will say something like, well, we can put tariffs against Canada because fentanyl is coming across the border and I've got to protect my people. And then the counterparty of that suit would say, yeah, there's no fentanyl really coming in from Canada. It's almost de minimis. That doesn't rise to the standard of you protecting our national security. There may be better arguments in other places, but you're going to have a tougher time saying that the UK deserves tariffs because of national security reasons, or Ireland. You might have an easier time with Mexico, you might have an easier time with China, but there are real open legal questions as to whether or not he's abusing that executive power. Does that make sense? And so the Democrats, now the House punted on this issue and basically gave the president the right to the end of the year to unilaterally decide on tariffs. The Senate would be raising their hand saying, you can't do that, and we're going to fight you on that. So if that were the case, the market's going to like that, because you're taking away the ability for President Trump to cause chaos. And you're bringing more stability and certainty to tariff policy, because it would have to be passed by Congress first and then approved by the president. It can't just be one person deciding, hey, we're gonna people or not. Okay, so that's something to watch out for today. I also kind of thought it was a positive for the overall market that President Trump announced that Musk was probably going to go back to running his companies. That has been whispered to be the case over the last week or so, but he said it more publicly today. And if Musk goes back to running his companies, I do think that's a signal that yesterday was important, that Musk putting $20 million into Wisconsin to win a Supreme Court majority, and then Wisconsin, who voted for President Trump last time, choosing a Democratic candidate plus 10, and then exit polling showing, mostly because of how unpopular Elon Musk is and has become, is it is a positive, because you're taking out somebody. If Doge will be less of a chainsaw, like, will do less chainsaw like cutting to the government and be more thoughtful about it, and if the House and the Senate will start to reclaim its power to make budgetary decisions, the market's going to like that. The market doesn't really like all of this cutting and all this chaos. It wants more thoughtfulness and more clarity. Does that make sense? Again, I've said this 100 times. I'm not making political statements, so if I'm offending anybody's politics, I'm not trying to do that. We are traders. I've said this 100 times. We're traders. We're not here to practice our politics. I'm sure all of you have your own points of view. You're welcome here to have whatever point of view you want. All points of view are welcome. And we are here as traders to observe. And the reality is, right now we got to talk about politics and this stuff because it's moving markets. If it wasn't, we wouldn't talk about it. But we're not here. We're not here to put money to work based on our own internal political beliefs. Like that, we don't do that here. We observe how government is affecting markets and trade from there. Does that make sense? This is not MSNBC. This is not Fox News. This is not CNN. This is just S&P making. We're just watching what's happening, observing. Okay. And you can get yourself in a lot of trouble by saying, hey, I think the government should do this, or I think the government's going to do this, and it's going to have this impact on the market and put a lot of money to work, being dogmatic about trade positions based on your political beliefs. That's a way to lose a lot of money. So please don't do that. All right. Any questions about any of this so far? And then we'll get to the fun stuff, which is trading.
No, he's done.
Yeah. So, and Darius, I'll just make one more point about this. So there's one thing I'm pretty nervous about for New York's markets that don't think people. I'm certain almost nobody understands. And yesterday, I guess it was Monday. Monday, I had a conversation with probably one of the richest people that I know,
Damn.
who comes from, one of those New York City families that had money 2 generations ago. This is an enormously wealthy person. Couldn't be nicer, by the way. Couldn't be a nicer person. Family couldn't be nicer. But he then started asking me about the tariffs, and we had a really interesting conversation about it. And he shared his theories as to what he thought the administration was doing. And this is a person who obviously has a lot of money in the markets. That's what legacy New York City rich people have done. They believe in markets. And so, I said to him, like, one of the things that I'm a little bit worried about, that I don't think people are talking enough about, is that there's this thought that, we can only go down, 10, 15%. We're down about 10% now, right, from the highs. But that if Trump continues with this tariff policy, if Trump continues turning his back on Europe, if Trump ran on no wars, it's not a political statement. That hasn't been what he's done so far. Particularly if he's going to join Israel in striking Iran. We haven't solved the problem. We haven't solved the war between Ukraine and Russia. We attacked the Houthis the other day. This hasn't been we're not fighting anyone type of administration. But so one of the things that you want to be thinking about is our markets are really propped up by a lot of foreign money. There are very rich sovereign wealth funds who put a lot of money into U.S. markets because they're liquid, because they go up for the most part over time, because they give you access to companies that are innovative and growing fast. We have the best markets in the world. If we could import anything that would be our number one commodity across the world, it would be our markets. Historically, they're better than anybody else's markets by a large measure. There's more you can do in markets. There's more ways you can express markets. You can get more bang for your buck in markets. You can get in and out of things. There's just, if anyone's ever been to like Singapore, which is a beautiful country, and observe their markets versus our markets, you're like, Christ, there's just nothing to do here. Even German markets, there's nowhere near as much to do here, and those are advanced markets. So, and they're regulated, and your money's safe, and 100%. And so the thing that I'm a little bit worried about is if we are really going to be, if we're going to turn our back on Europe, and we're not going to be the friend to Europe that we have been in the past, and we're going to escalate tensions with Iran and side with Israel, and we're going to continue with this tariff policy, and there's going to be retaliatory tariffs, and there's no certainty as to how this is all going to shake out. Why would those big sovereign wealth funds keep their money in the U.S.? Why would Norway, near $1 trillion, keep their money in the U.S.? Why wouldn't they continue rotating out into Europe and Asia if they can't understand the full risk that's going on here? And so, if that continues, we're not going to go down. We haven't gone down yet. You haven't seen anything yet. If that continues, there could be a real repricing of our markets if that would be to be the case. So we really need to create some certainty with our tariff policy, and we really, it'd be nice if we didn't turn our backs on Europe. It'd be nice if we make some changes. You won the election. You have the right to make some changes, but I think I think you got to be thoughtful about what's positive and what's not. All right. I think that's enough on that. We all agree? All right, good. Kenny G.
Yeah. Hey, Bella, can you hear me?
I hope that helped. I thought I provided some commentary on the overall market. I hope that was helpful. And feel free to shoot me an email if you have any question about any of this stuff. But meant to be helpful there. All right, Kenny G, you're up.
What's up, Bella? You can hear me all good?
Yes.
All right, great. Thank you for allowing me to present this. This is a QBTS D-Wave, the company breakout short squeeze. Breakout/short squeeze. This happened on March 14th, on a Friday. So starting it off, zooming out to SPY. Always good to see the bigger picture. QBTS isn't very correlated to the overall market, but it's still pretty important to know what type of market regime we're in, mode of the market. Around this time, there was some elevated fear, uncertainty, volatility. We just had a fake breakout from highs and quickly fell back down and below the 200 SMA. And you saw many growth stocks, speculative stocks sell off really hard. So that sort of tells you the market is sort of taking out their speculative money and playing it more safe.
So let me ask. So let me ask you this. So the Magnificent Seven is down how much from the highs?
I believe about 20%.
Okay.
Somewhere around there.
And how much is the overall S&P?
About 10%. A little over under.
So if you go and take a look, there's Michael Batnick put out a pretty interesting tweet talking about how the Magnificent Seven has certainly come off a great deal. And to your point also, these growth stocks and the quantum computing names have come off a bunch as well. But the overall market's actually up 0.5%. And so, right now we're down almost 10% from the highs overall. We've been down this much before, multiple times. The key, some smart people are starting to email back and forth to us and each other that just because we're down 10% doesn't mean we're not going to go back up again. And one of the things they're pointing to is the fact that the overall market is actually, the other stocks are up 0.5%, almost 1%. And so but they're not down, which is super interesting. You would just think everything's down across the board, right? When we're down 10%. It's the Magnificent Seven that have dragged us down. And it's, to your point, the NVIDIAs and the quantum computing stocks, the growth stocks that get hit the most. And so the key going forward is to really watch what those other stocks are doing. They haven't really gone down that much. Now, if they don't go down that much, that's a super strong sign for the market. If they start to go down, that's when the market's starting to signal what?
That like elevated fear, more risk off.
Caused by what? What would that?
More
recession.
tariffs.
It's a sign of we're gonna have a recession.
Gotcha.
So there are pretty smart people watching those other stocks to see what's gonna happen. And that's if we have a recession, we're gonna go a lot lower. If we don't have a recession, you'll see those stocks. What we'll be pointing back to to the fact that, hey, remember when it was the Magnificent Seven that went down, but the rest of the S&P never really went down. That was a signal. So, does that make sense?
Yeah, really interesting and good to know.
Anyway, that's what the smart money's talking about. What about the other stocks? How come they're not even negative yet? Think the yield curve signals recession anymore? You mean that? So I mean, look, 10 years towards the lows, right? They just got they got below the lows from a couple months ago, not from the lows from last year. But I like to look at the 10-year. I think the 10-year is really good to look at to see if we're heading towards recession or not. But yeah, if you start to see, and other people look at the 2-year versus the 10-year. And so if you start to see you're getting a worse yield on the 2-year, but a pretty good yield on the 10-year, that's signaling a recession as well. Okay. Let's see what we got.
So after that, the market has gotten below some important support levels. First below this range up here, and then I had a level marked off support zone of 565 plus the 200 SMA holding below that. This wasn't great for the overall market, below short-term moving averages as well. What else you saw during the current market regime is many intraday reversals as VIX was elevated. Headlines were moving the market as well, especially tariff and geopolitical related. Breakouts were failing. You would see some of them get stuffed, rejected, and yeah, risk on assets as well, getting strongly sold off, as mentioned.
Oh, hey, we forgot to ask you. Who are you? Where are you from? Where are you at in your trading career? I apologize.
Yes, sorry, I forgot about that too. My name's Kenneth. I'm a part of Inside Access for a little over half a year now. I first learned more about SMB last year at the first Miami event that was thrown back in April 2024. I was sort of a bit lost, more of a break-even trader before that. Not a lot of direction. Didn't really have a solid playbook. Didn't know what professional trading was like before that, and it was a real eye-opener. Super glad I went, super glad I got accepted to go by you guys. And yeah, live here in Miami, independent trader on my own, born and raised here in Miami. Recently saw you at Traders for a Cause.
There.
A month ago. Yeah.
There. That was fun.
Oh yeah, I loved it. I wish I stayed there longer because some people stayed there till after and showed up late as well. Yeah, those I've gone to pretty much every event by SMB thrown here in Miami. They're great networking opportunities. You can meet traders, meet what else they trade, and eventually connected with some people there, became some good buddies, and formed a pod with them, and that's been super helpful as well.
Awesome.
Yeah.
Love it. Love it. All right, great. Well, thank you for that context.
Thank you. To continue on, so we are going to go over now the big picture of the whole quantum sector. Again, like as I mentioned, this is more of a speculative sector, more a risky asset. They are known to be a pendulum swinger. They back in 2020 and 2021 have seen some wild moves as well, and they recently started another crazy move back in Q4 of 2024 with a major run up. This was around the time when the markets were really hot. Trump just won the elections, and the market was in chase mode essentially, and things that caught a bid, they ran really hot. But eventually, it all came tumbling down in December due to Jensen Huang's comments on quantum being really far away. And that's what broke the camel's back essentially here and caused a huge sell-off. And many quantum stocks got sold off more than 50%, made their lows in January, and some of them ended up holding above their January lows, and some of them eventually were weaker and got below January's lows. What started this run-up back in Q4 of 2024 was basically some of these quantum stocks would get like a NASA, oh, one of them got a NASA contract. They're just other orders. That's what fueled this up. They were companies that were losing money, not profitable, but shorts tried getting in and getting in the way, and they got run over. Short squeezes, violent, crazy moves, lots of trading opportunities to both sides. And another run-up started again here in March, which we're talking about. A little bit more context, more recent now in March, the quantum stocks. So they're before this trade, this breakout trade, they're like the whole market knew that there was a anticipated event, Quantum Day. NVIDIA was hosting it the week after this occurred. So that was a big looming catalyst to be aware of. Sometimes you can see some crazy moves happen before an anticipated event, and that's what happened here.
NMAX.
All the quantum names still had a high short float, ranging from 10 to 20%. And the day prior to this, there was a Carousel short report. Carousel is a research firm that comes out with sometimes short reports, and they came out with one on the biggest quantum stock of the sector, besides Google, Amazon, IBM. IONQ had a $5 billion market cap, and they came out with their short report at 9:10 in the morning. The day before this, brought some brief selling to the whole quantum sector that lasted about 5 minutes, and then all the quantum stocks recovered and ended the day pretty balanced. This was the first hint that quantum stocks they were just not fazed by it. So yeah, that was a good hint. These are the four main quantum stocks: IONQ, QUBT here, Rigetti, and then top left QBTS, what we're focusing on. So QBTS and RGTI, both to the left here, were above January's lows. This was showing these two were the stronger ones out of the four. And yeah, they never broke their lows made in January.
Good. And I like how you're finding the strongest stocks in the strongest sector, or the strongest stocks in a strong sector.
Mm-hmm.
We can evergreen it.
Thank you. So zooming in, why why QBTS was selected for a potential breakout. QBTS had the strongest and best looking daily chart of all the quantum sectors. Above January lows. We recently saw the day prior they reported earnings and saw some pretty strong price action. They were up nicely, coming back near this resistance made in the middle of February. So QBTS was trading sideways after their huge sell-off back in December. already mentioned that they attempted to break out here mid-February but failed, but it gave you that level to keep an eye out for in case quantums were to rally ahead of their anticipated event. And yeah, so I really liked this January low, how it was holding above it. It was showing you beforehand that yeah, this was one of the strongest ones of the sector compared to the others below it fading. So the day prior, QBTS reported earnings. Earnings weren't great. They reported an $86 million loss, but they gave some pretty decently good guidance, better than expected guidance, topping revenue estimates and strong booking growth. This was here, pretty decent rally on day one. 2 days before this breakout, they were halted midday. They released an Advantage 2 update. It was a catalyst. The company revealed that they were the first to demonstrate quantum supremacy on useful real-world problems, and the stock spiked up 17% when it unhalted. I'd give this a score. I don't think it was a great catalyst. What would have been a great catalyst pre-earnings, something like SMCI back in 2024, like a preliminary revenue increase, something, or maybe taking more market share. Something stronger would have been a much better catalyst. This was so-so, so I'd give it just like a 5 out of 10.
What do you think about the fact that their guidance was better than expected?
Surprising. It probably caught some people off guard. And that was likely what fueled buying that day.
What was the, do you remember how much better guidance was than was expected? And was it better by 5%, 10%, 20%?
I don't think I wrote that down. If it's not an intraday fundamentals slide, that's a mistake for not noting that.
I mean, look, if you have that in mind, so you could beat guidance, or guidance can be better than expected by 1%, or it could be better than expected by 20%. Those would be very different things, right?
Right.
So good to note that.
Yeah, thank you. So this catalyst came out, and then on day one of earnings, QBTS had a strong opening drive, highest volume of the week, and then it ended up closing in the upper quartile of its intraday range. On the daily, you could see an acceleration in volume off of day one earnings. Pretty decent look as it's coming up into this resistance area, daily resistance of 820. I threw in a comparable here. I like throwing in comparables. Doing a lot of write-ups, you sort of your brain starts remembering some recent charts, and this was something very recent. The month prior, SMCI had an anticipated event of delayed earnings, and they saw something similar, breaking out over daily resistance, gapping up, strong volume, high short float stock. So you know shorts were getting squeezed out. Yeah, this is one comparable. Not extremely similar, but it could give you like something similar to like look forward to. Something that can prepare you for what type of move we can expect. The main difference, though, is that SMCI is below its 200 SMA, which isn't shown here, but this is a downtrending stock, and the quantums were above their 200 SMA. That's one difference. Going to the intraday fundamentals, we've got the catalyst first. Earnings, not great. Better than expected guidance. A recent short report, I threw that in under catalyst as well. On I1Q, the biggest quantum stock of the sector, anticipated upcoming event the following week, and then the SOSO Advantage 2 update that QBTS released midday, 2 days prior to this. So heading into Friday, March 14th, QBTS was gapping up 10.5%. Heading into day 2 after its earnings, holding over prior day's highs, decently good pre-market volume. This was the highest pre-market volume done of the week. It was about 8.5% of its average daily volume just done in the pre-market. This is actually great looking as it's heading into the next daily resistance. It's listed on the NYSE, so it's could be important to know this, that the NYSE volume may not come in exactly at 9:30 a.m. Could come in 1, 2, 3 minutes delayed. Here are the other things to note: the AVOL, ATR, and such. High short float. VIX is not super relevant to this trade, but we were in an elevated VIX environment. QBTS has a $2 billion market cap, and yeah. Technical analysis, this was day 1 of its earnings. So in the pre-market, you see we move higher, get over prior day's highs. This resistance was created overnight in the overnight trading session. We hold over prior day's highs and continue and go higher over overnight resistance, create pre-market high resistance, reject here. I've seen you, Bella, talk before about grading pre-market high lows.
Yeah.
What makes it what qualifies it? Why would you call that a pre-market resistance or support? Here it was just touched it about 2-3 times and then consolidated below it for about an hour. One more time before the market opened and wasn't able to breach it either. I'd score this pre-market high level as a 7.5 out of 10. It showed that there were some sellers there.
Yeah, I mean, well, the prior day high is going to be the most important of any of those levels you look at. I think the overnight resistance is second because of the time at which it couldn't trade above the high. And then that pre-market high, there's just not a lot of congestion and time there. It gets me as interested as the other 2 levels. So I would rank them as the prior day high is the first most significant technical level. Overnight resistance second because it has more failures and congestion and touches to a level, and then pre-market third.
Okay, and 7% of daily average volume done in the pre-market. A little bit unusual, not huge though, just the biggest pre-market volume of the week, but it's not like anything over 20% though.
Yeah.
Moving forward to the trade strategy, we're going over the stock selection, why we chose QBTS. A few factors is the anticipated event that was going to be happening the following week. Catalysts, multiple catalysts stacking on top of each other. Nothing wow, nothing 10 out of 10, but these are them. QBTS was the strongest stock in the quantum sector heading into the day, mentioning their high short float of 21%. Had a strong day 1 after earnings and strong pre-market action. And now to trade it, we want to see some more strong RVOL breaking through the next important technical resistance. how would we trade this? I would look for the pre-market high break. Want to see that strong R ball. So you buy aggressively, you hit the ask as it would break through pre-market high. You would put your stop at the lows of the day. You would treat this as a scalp and trail if the trade goes your way. Have a trailing exit of
Look, I think for a second day play, this is textbook. It was really strong on day one. It had really good volume on day one. It had a catalyst on day one. It closed in the top 20% of its close. That's indicative of the buying's not done yet, and there's going to be follow through. It's also in a good sector. And then I guess we have an industry event too. So this is a good example for, you'd want to have alerts set for new highs for the second day because of the way this traded on day one. And you'd want to have alerts for important support areas from day one because of the way it traded on day one. So you'd want to buy pullbacks into important support areas. You'd want to buy important new highs from day one. So, the high from day one certainly would be one. But this would be a good this is setting up for a good second day play.
I have a question. So you would buy day one support areas even if it hasn't reached over the daily resistance that we're gonna head into?
Yes, I would. Okay. I would look. I would have an alert there, and I would look to buy. And a good move is a pull in right on the open into a very important support area. So let me give you a really good setup. So let's just say the last leg in the 3 o'clock hour, was a move above. Bring up your chart. Bring up your chart from before.
This is day one.
So day one, it goes to $10.
No, highs of $7 here.
Oh,
open around $6. Yep.
So it goes to 7, but it comes from where?
From 6. It opened at $6.
Okay. So if I look at that, and then the next day it's opening up, looks like it opens up around
770.
770, and then it goes up. All right, so let's say it just pulled in really quickly to $7. We'll make it easy. The prior high was 715, something like that.
Yes.
So let's say on the open, the stock spikes down to 715, it catches a bid. That's a really good long based on the way this thing traded yesterday. You'll get a lot of opportunities like that to buy pull-ins like that. That's a special price that you notice from day one. And because this finished at the highs, was up so much, finished in the top 20%, you're gonna want to at a minimum watch what happens at 715, and or buy at 715 just on price. Now I tend to want to watch, and then once it starts to show me the support, buy, because you've got a pretty important technical level there. So yeah, and then it looks like 675 is a pretty important area too. It probably wouldn't really get there, but that'd be another area that looks a little bit important to me.
Okay, thanks. That's good to know. I usually just go for the breakouts. I'm not as much into buying pullbacks like that.
Yeah,
good to know.
Yep, it's a good trade.
Still finishing off this trade strategy. I categorized it as a B trade. Why not an A or A plus? Like I mentioned before, the current market regime was more uncertain. Wasn't as hot as Q4 of 2024. That marks it a grade lower. We were seeing failed breakouts, some breakouts getting stuffed. Plus, we didn't have an A plus catalyst. It was more of just an anticipated event more than anything. Day 2 of earnings, yeah, the earnings weren't standout. The guidance, I'm not sure the percentage wise, how much of a beat it had, but nothing. Wow, nothing 10 out of 10. So that's why I gave it a B. But once we get into the trade, the R-ball was pretty significant. So for the trade management, first I calculated the EV of the trade. This is a practice I've been doing more and more to just help me. I think it's a good practice to do before a trade and after. Eventually, you learn to do it in your head quicker. That's the point where I'm trying to get to. Using the SMB EV calculator, it gave it a C trade. We're talking about the pre-market high break. It breaks on the first minute. First, it does, it gives sort of a down move. It holds over the overnight resistance of 750. Doesn't get quite to there. It gets to the low 760s, I believe, high 750s. And it quickly comes back to opening print, shifts back to pre-market high, and stays there for a few seconds before breaking over. So we are highlighting the pre-market high break. You do have the ability to hold on to a core, because once you get stopped out here, this is a momentum trade, pre-market high break. I was using 2-minute prior buy lows as a stop, which you do get stopped out here for a 2-to-1 risk to reward trade, 2 reward and risking 1. This EV doesn't include the continued strength it gave and multiple other trades. This was just for the pre-market high break. But the main point that I want to highlight for this playbook is the stock selection. This stock ended up being very much in play, gave multiple opportunities, mainly to the long side, but even to the short side as well. Once it gets really extended, I have a list here of just the trades I see alone for continuation. I'm not so much of a intraday mean reversion trader for day 1, but you get those as well. And yeah, your EV does increase if you were able to hold a core of, I'd say like 15% after you get stopped out here. I'm not too familiar with trading with a core. I'm trying to learn more about it and find spots where I can hold the core. But yeah, you do get great early fills if you first get it. Here, I have a quick clip.
So just go back to that slide, and I'm gonna. Yeah, I mean, like this is really great stock selection. You can tell by the way the stock traded. You can also tell that there was a big catalyst here because of the way the stock traded. So one of the ways that you can exit a swing position is to look for consolidation areas and to say, hey, as long as something's above VWAP, I'm going to need it to trade below an important consolidation area for me to exit. And so you don't really see that until it gets below 950, which is around
11:30. Yeah,
11:30. There's no. It goes up, it pulls in, it consolidates, it trades lower until 11:30. And so, yeah. Anyway, I don't think we talk about this exit strategy a lot. I like to talk about it for trades to hold. Second day plays, trades to hold. Second day trade to hold plays. that can be an exit if you really feel like the stock can run a bunch, which this one could. But your trade is to buy above the high from day one, or to buy above the pre-market high, and you don't really have to do anything until it gets below 950 as an exit. For those of you who are just new to this, these hitchhiker and or breakouts, Jeff talks a lot about them with his work. But anyway, let's go to your executions.
I did not include my executions in this playbook.
Anyway, so for you, it's just buy above the pre-market high. I don't love your pre-market high. I actually really love your. I don't love your pre-market high because I don't think enough time goes by. I don't think that level gets tested enough. But I do love this being a second day trade. And I do think this is a classic textbook second day trade. And I do love your stock selection here. I would study this more as a trade to hold second day trade. I would note how clean it is, how clean the stock trades. That's unusual. And so this is one of those trades I want to imprint into my brain, the way it's so clean for so long, and recognize that when it got above the high from day one, I've got something there. And then there's subsets of it got above the day of high one of day one. You could have bought it when it gets above day one. You could have bought it when it gets above the
Daily resistance, 820 or $8. There was some size here that we could see going over the tape at $8. 820 was a daily resistance. So you would like more once it gets over, would you say 820 with the strong R ball, risk lows, risk VWAP?
No, I think I prefer an earlier entry. But I think that you want to understand why the earlier entry is really going to work, because it's above the day one high. Everything above the day one high is just going to work.
Okay. Good to know.
There's no I mean, you want to think about it as there's no resistance. So you have a catalyst from that day one, and that there's no resistance from that day one. So Brian Shannon talks a lot about this anchored VWAP. The trade catalyst is from day one. The resistance levels are from that day. We need to go find the next resistance level from this particular catalyst, from this anchored event. And so that's what's going on there in the stock. And you don't even get any resistance until it gets below that 950 area. All right, I got to leave you here. We'll look for the 4 o'clock announcement. But this is a really good example of a secondary trade worth studying.
Okay. Thank you so much, Bella, for letting
All
me
right, thanks
present
everyone.
this.
We'll see you guys next week. Have fun after the close.
Thank you, Bella, and thank you, Kenneth, as well.
Thanks, Caleb. Thanks, everyone.
Of course. Hope everyone has a good rest of the day, and we will see you guys tomorrow.
got short.
Yeah, short.
I got long there, bottom.
Right here?
Got long here, here and here. So that they're going to be long. I was gonna short here, but I missed it.
All I remember is they picked the orange chair. And I got fucked. No, but it was old news. I shorted it, I lost one, I shorted it. It's so different from like the Reddit one. Yeah, yeah, that Reddit was
Amazon
nice.
today. Amazon was nice today too.
I'll probably get back everything. I want to be
Yeah, I gotta do my burger, bro.
Nah, you can't. Today's probably one of the most busiest days of the year. I've been super active. This is the biggest day of the year. I'm sorry. Biggest day of the year.
I don't know. Yeah,
Biggest day of fucking since March. No, my shit. March was like 70 cents. That's really good. Oh, if I can, dude, you know, every other game over this too. Every other game over this like $5. What? That's like yours too? I'm buying it for $4 and I got my guy. He's a $7. That's fucking really good. You pay 70 cents per shit. It's Saturday. Oh, it's not. It's Final Four. Saturday. You're doing Duke, Florida, and Duke all in one. I'm doing Duke future bet at 101. Plus 101. Plus it's minus like 110. For the whole tournament. For the whole tournament. There's minus 110. Yes, they're favorites to win. Holy shit! It's fucking crazy. Wow. I think they can win. Oh yeah, dude. I think so too. I mean, my money's on them. Flag is a piece. What? I have like Duke versus Auburn. Why is that line? Yeah. Why is that line? That's what I'm hoping. Huh? Why is that line so cheap? That's not cheap. There's still 4 teams. That's cheap, right, Andrew? I like it. It's cheap. It should be minus 200. Yeah, it should be minus 200. At the beginning of the tournament, they were like plus 400. Yeah. 4 bucks. Yeah. I'm surprised it's minus 110. It's awesome. I would think plus like 120, plus 130. Placing a future bet. Do it. Duke Auburn. Duke Florida. Do you win it? I actually win first. I think Brandon got like 2 more picks than me. Oh yeah, I prefer Duke.
Damn. Oh shit.
afternoon, everybody. Good to see you all. Since Inauguration Day, President Trump has secured trillions of dollars in private and foreign investments. Every single day, more money is pouring into our country, which will create more jobs for hardworking Americans. Today, Schneider Electric pledged to invest more than $700 million in the United States to boost American energy infrastructure and AI. On Monday, Hyundai announced a $20 billion investment in the United States, including $5.8 billion for a new steel plant in Louisiana, which will create nearly 1,500 high-paying jobs. President Trump is truly turning America back into a manufacturing superpower. Yesterday, President Trump marked National Medal of Honor Day by meeting with 21 of our nation's bravest heroes and incredible patriots who have been awarded the highest military honor. Beautiful picture. The president also signed a historic executive order to protect the integrity of American elections by strengthening voter citizenship verification and banning foreign nationals from interfering in U.S. elections. These are the common sense solutions that only Democrats could oppose. But voters deserve elections they can trust, and critical confidence is being restored thanks to President Trump's leadership. Later this afternoon in the East Room, President Trump will mark Women's History Month by honoring the exceptional women around our country, including the highly talented women in his administration and his cabinet. And on an additional scheduling update, the president will hold a press conference in the Oval Office today at 4 o'clock p.m. to announce tariffs on the auto industry, and I will leave that to him to make that announcement later. Unfortunately, all of this good is happening for our country. This administration is working hard on behalf of the American public every day, but the mainstream media continues to be focused on a sensationalized story from the failing Atlantic magazine that is falling apart by the hour. Here are the facts. The National Security Advisor has taken responsibility for this matter, and the National Security Council immediately said, alongside the White House counsel's office, that they are looking into how a reporter's number was inadvertently added to this messaging thread. We have said all along that no classified material was sent on this messaging thread. There were no locations, no sources, or methods revealed, and there were certainly no war plans discussed. The Atlantic has even admitted this themselves. Their release of these internal messages validates the truth, which we have been saying all along. If this story proves anything, it proves that Democrats and their propagandists in the mainstream media know how to fabricate, orchestrate, and disseminate a misinformation campaign quite well. And there's arguably no one in the media who loves manufacturing and pushing hoaxes more than Jeffrey Goldberg. Goldberg is an anti-Trump hater. He is a registered Democrat. Goldberg's wife is also a registered Democrat and a big Democrat donor who used to work under who? Hillary Clinton. This is the same Jeffrey Goldberg who infamously lied about weapons of mass destruction to get us into the Iraq War, which cost trillions of dollars and thousands of American soldiers. And how else has Goldberg discredited himself? By absurdly claiming that President Trump was Vladimir Putin during the 2016 campaign.
Very, very good day, and a lot of good things are happening for our country. Please sit down. My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. Going to make it wealthy, good and wealthy. For decades, our country has been looted. Friend and foe alike. They really suffered gravely. They watched in anguish as foreign leaders have stolen our jobs, foreign cheaters have ransacked our factories, and foreign scavengers have torn apart our once beautiful American dream. We had an American dream that you don't hear so much about. You did 4 years ago, and you are now, but you don't too often, and for many years and decades even, you didn't hear too much about. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to